Good morning, Jags. This is Fahad. Today is Monday, September 28th. Let's get started. Last week on Wednesday is when we saw NYMO was getting down to a level where it was getting extremely oversold at minus 79 reading on the closing basis and nearly minus 100 reading intraday on Thursday. And it was clear at that particular point that short-term momentum was getting a bit too extreme to the downside. And then we started to see a reversal on Thursday in the market, and we started to point this out in the chat room as well. And then on Friday, we started to see more follow through to the upside, resulting in what was starting to look like lots and lots of bullish falling wedges, which is a very powerful and very strong technical study. And we like to use those all the time. So just to give you, real quick, here is the comment in chat room on Friday um, at 3:54 p.m. just before we were closing. It said, we are finishing the week with NYMO getting oversold down to minus 80 yesterday, and then tons and tons of bullish falling wedges everywhere. Explosive setup for market to rip higher next week, assuming no headline risks. And then similarly, I also tweeted this out at the same time on Twitter. We are ending the week with lots of bullish falling wedges everywhere, assuming no headline risks. A strong setup for next week. I bring this up because here is the chart of Nasdaq that I showed in the chat room on Friday. And you can tell from by looking at this chart that we had this setup. Keep lines very simple, no moving averages, no clutter or anything, just a simple technical study that this is what bullish falling wedges look like, and Nasdaq ended up actually breaking out right into the close above that resistance, which means if we get a follow through, we will see power candles, a lot of them. Now, fast forward today, this morning, we are getting exactly that. Nasdaq is going to open higher. Right now, we're looking at Nasdaq futures up 1.9%. Think about all the high beta stocks this morning when Nasdaq, the whole index itself, is up more than 1.9%. There's going to be a lot of stuff today that's going to be up 4, 5, 6%, and some in the micro cap, in the small cap and the mid cap space, like SAS, for example. If the momentum continues into that crowd as well, they're going to be up as much as in high single digits or maybe even 10% or more. So you're going to see a lot of sparks today. This is a very strong, very positive follow through with this bullish falling wedge that we pointed out on Friday, and then a follow on today. So keep an eye on Nasdaq. It's going to lead us higher. Russell 2000 index is also gapping higher by about 1.5%, but not as much. We're going to see if it's going to be some sort of fade there or not, but it's going to try to catch up with Nasdaq, but it doesn't look like it's going to be able to outperform Nasdaq, and so on. Also, if you look at the MACD and the RSI lines, here is the MACD bull cross that's coming. So we're going to get that today in Nasdaq, and RSI is sharply lifted higher. I pointed out a bunch of charts in the chat room on Friday. So for example, you can see Alibaba had a setup for a breakout from the wedge. Similarly, Advanced Micro Devices had a rounding bottom, so this one sets up for a breakout. We had Teradyne, which was basing for the last couple of weeks. This is a setup for a technical breakout, and similarly a lot of other comments. So now, with all of this said, look for sharp rally. If I think it's gonna be a very positive day for a lot of tech names. Now, I do have one stock I just want to quickly cover, given the news this morning, and that is Uber. Uber is going to gap higher by about 4% in pre-market. It closed at 34.46, and it is trading after spiking as high as 37.47. It's faded a little bit, so it's going to be open around $35 to $36 per share, basically 3 to 4% higher. I think it's going to tack on the gains on that gap higher. So I'm expecting Uber now to actually rally up to this 37.60 resistance, which is where we topped out the last time, going all the way back to June. But I think this time the setup is it's going to take out that 37.60 resistance and likely to move all the way to new 52-week high. You all saw the news this morning that was covered in the first read as well. If you go to the first read, you'll see that not only Uber is disclosing, sort of like pre-announcing essentially, what kind of revenue growth they're seeing from Postmates acquisition. Postmates, the company that provides food delivery service across the U.S. But the part that I find the most interesting one, which I think should provide some support to the stock, is the chief magistrate in London has now opened Uber, has lifted the ban on Uber. With a proper license to hold and so on, so on and so on. So basically, the total amount of traffic in London is now going to start increase from Uber, and that's a very, very large market, similar to if you think about New York City, for example. So that's very positive for the stock. And lastly, I will point out that this is a stock that every single time it has pulled back, and that's what happened last week as well when it came down to 3250 major VOP congestion support level and started to bounce off that level. Each time it pulls back, we start to see large leap call accumulation in out months. To give you one example of that, here is simply go to Jaguar Scan, and what I've done over here is if I zoom this out, you will see that I'm only looking at the data from 7/27, so July 27 to last Friday, September 25th, and you can see the bullish bias is more than 84% with steady accumulation in tons and tons of call options. If you want to take a look at any of those, so for example, here is $3.2 million bullish bet in the January 2022 32 strike call. If you want to see what happened here, you go here, you right click, you go to drill through, and you click on lot details, and you can see right here that this was on, they were buying these calls on August 31st, August 25th, September 2nd, September 1st, and basically nonstop accumulation. All the contract sizes and everything is specific. You can drill this down further and you can find exactly. So more than $3 million worth of call premium accumulated just in that one strike alone. And so very bullish bias, 84% bullish bias, and now you got the news. So I expect a breakout through 37.50, and this will likely get to $40 per share in time. Also keep in mind, lastly, that there is this 59,000 open interest sitting in the January 40 strike calls. And if you go further out to January 22, similarly 40,000 open interest sitting in the January 2022 40 strike calls. So look for Uber to continue to power higher from this level. That's it from me. Jay?
Morning, Fad. This morning, taking a look at CLAR Corporation. Ticker is CLAR. This is an outdoor retail company that offers products for mountain climbing, backpacking, skiing, shooting. And its major brands include Black Diamond and Sierra Bullets. Now, technically, first off, the stock has slowly grinded higher since the middle of May with some slight pullbacks along the way. And looking at the chart now, looks to be right about trendline support, so a possible entry here. Fundamentally, last week, Stifel hosted management meetings. And as you can probably guess, the Black Diamond and Sierra Bullets brands were some of the topics. Now, regarding Black Diamond, which Stifel refers to as the crown jewel of the company's portfolio, interest in Black Diamond's mountain and snow categories is currently driving the business, and trends have strengthened in North America as retailers have reopened. For example, REI, which made up 14% of 2019 revenue, this retailer reopened back on July 9th, and consumer demand has reportedly outstripped supply at retail, causing a positive selling environment. Management also said it expects backcountry skiing could increase 50% this winter, which supports the outlook for snow safety items such as skins, beacons, shovels, and airbags. The mountain category is equally in tight supply at retailer, with trekking poles, headlamps, packs, and apparel all benefiting. They noted that bookings are also reportedly strong into the spring 2021, and the company has actually begun to take in orders for fall 2021 at this point. Now switching over to Sierra Bullets, This business is being driven by sort of political tailwinds, social unrest. They note that increased capacity and traction with some of its key retail partners sort of underscores the near-term strength. They estimate 79% year-over-year revenue in the second half of 2020. And then also just a quick note, there was a headline this morning, most recently Remington, they filed for Chapter 11 bankruptcy. Sierra was actually selected to acquire certain assets relating to the Barnes Bullets brands of specialty hunting bullets. So that was just a quick headline that caught my attention this morning. So anyway, technically, as I said, stock is at trendline support. Fundamentally, everything seems to be going well for both Black Diamond and Sierra Bullets right now.
Yeah, very interesting stuff. Their Black Diamond business, did I hear you right? 50% growth to be expected?
They noted that the specifically backcountry skiing could increase 50% this winter. And they also did note that bookings as well, those are strong because they have strong bookings for the spring 2021, and then they actually have started to get orders for the fall of 2021 right now.
Seems like a very strong number. Considering, I mean, naturally, this was also impacted by the overall COVID shutdowns and everything. Sure. And I'm looking at, for example, for the first 6 months ended June 30th, the company's revenues were down 23% year over year, all because of COVID shutdowns. So the bounce from that level to reach the kind of booking growth and revenue growth that you're talking about seems like it's a V shape of to the 10th degree, basically, to the power of 10th. Very sharp reversal. So this should be an interesting one. Maybe there's a setup here really for the next leg higher, but the stock actually right at the trend support. This also happens to be right around 1320, a major VOP support level. So in other words, this was a previous breakout, or the previous, you can say the the breakout level, as well as where the stock topped out, pulled back, broke out on rather heavy volume, and now retesting that. So from a level from here should carry this all the way to about $15.50. Interesting one. I might actually take a position in this one myself after this discussion. Looks pretty good to me. Chronicle.
Morning, Fahad. I have an update for what's coming up for JaguarMedia starting next week.
I'm pretty excited about this, by the way. But go ahead.
So we recently previewed a new series called Jaguar Investing that we'll be introducing around the beginning of October, where we're focusing on generating ideas with a longer term horizon. And so as the series starts getting underway, these tables are going to be important as they help us to keep track of all the investment ideas that have been put out on watch, as well as the ideas that have triggered the entries that we suggested and are now active, so to speak. And these are meant to serve as an informal guide and also to keep things organized once we start to amass dozens of ideas over the course of the series, so that it doesn't start to feel messy and cluttered. So how this works is we have a watch list table to keep track of investing ideas we think are promising. And below that, we have a table of ideas that we deem to be already active. And eventually, when we start recommending to get out of certain investments, there's going to be another table that keeps track of ideas that are no longer active. And so as an example of how this works, this morning I have a preview of several ideas that I've added to kick things off. 3 are currently on the watch list where we're waiting for a better price, plus 2 in our view are good to go. Again, this is just a tracker for reference rather than a signal service. So on the watch list, I have West Japan Railway. The symbol for that is WJRYY, or 9021 if you have access to Tokyo, which is more liquid. And this is primarily a bet on the coronavirus subsiding and tourism coming back to Japan during the new business cycle. This company is a monopoly that operates railways along the western side of Japan. So basically Osaka, Kyoto, Okayama, these are among the major cities that are in its network. And unlike East Japan Railway, which serves all of Tokyo and derives more stable revenue from daily commutes, West Japan tends to rely more on tourism and also has some exposure to hotels and retail. And so as a result, West Japan Railway stock tends to have higher beta and more upside during the good times. Obviously, the stock has crashed about 50% from peak due to the global pandemic, and the company is expected to report their worst full-year net loss since 1987. But looking ahead, I think the worst is almost behind us, and given the recent volatility, if we get a retest of, say, mid to high 40s, I'd be a buyer targeting around $80 over the next 12 to 24 months. Because looking at the latest traveler surveys here conducted recently, Japan remains the #1 desired destination when tourists are asked where they want to visit post-pandemic. With tensions going on between the West and China, we can see very few people want to go to China now, and so that's sort of a tailwind for Japan too. On top of that, we have the Tokyo Summer Olympics next year, and on balance of probability, I think the country will open up its borders by then. And if people are going to visit Tokyo for the Olympics, chances are they're going to go visit the west side of Japan as well. So I'm expecting a dramatic improvement in cash flow next year, even if expenditures may go up. And the company is sticking to its eventual 35% payout ratio in a couple more years. So that's the first part of the bull case, and I'll touch on the rest when we get to recording the actual episode. Now, moving on to the active table, there's two ideas there that I think are good to go right away. The first one is Youdao, which we already covered previously in episode 3 of Chinese Tech Demystified. I also provided an update on the company during our morning conversation on September 10th, where I said I was starting to turn from cautious to bullish. And since then, the stock has been stabilizing, and no change to the thesis. I still think consensus is too pessimistic with their forward estimates, and the recent sell-off is overdone, even after accounting for a couple of challenges the company is facing. So the next one on my list is Expel, symbol XPEL. This is currently a $650 million company, and I think over time it can easily become a $2 to $3 billion company. And as such, I think this stock can eventually get to high double digits. As far as I know, only one analyst covers the stock, and this is a profitable growth company. It's not like one of those that are always losing money. I have a link to a 2-minute video that basically shows what the company does. So I was thinking maybe we can play that on mute while we talk about it. So what this company
I can play it, but it's there's going to be no sound to this. Understand that, right?
Yeah.
Here is okay. Go ahead.
So what this company does is they're in the paint protection film and window tinting business, mostly for automobiles, but they've also expanded into residential and commercial windows. Like they provide an invisible film that goes over the car paint, and it acts like a protective surface against scratching or the weather and all sorts of adverse conditions. They also sell a proprietary subscription software that's used to custom make the shapes and templates for the protective sheeting, and also uses a database of vehicle patterns. And the way they grow their sales is through forming direct partnerships with dealers and installers, and this essentially saves them a ton of marketing costs, which is partly why this company has insane margins and 50% return on equity. The company has a very strong moat, and it's gained a cult following through its sponsorships and partnerships of the biggest Indy car races. So there's like a coolness factor that the company has managed to build for itself. Mainly, maybe not as mainstream as Apple or Starbucks, but something more niche along the lines of Dollar Shave Club or CrossFit. Like if you go to a car or racing enthusiast forums or online dealer threads, there's a lot of car owners and shop owners talking about Expel and having a preference for their protection films. It's a loyal fan base and an even more loyal dealer base, because not only is Expel aggressively marketing to these dealers, but they're also offering training programs and inviting them to conferences to get them used to the software and installing the film. So there's a deep relationship building going on. So right now, if we look at the latest quarterly results, which I shared in the chat, we can see Expel managed to grow revenues despite the pandemic, because China sales roughly tripled. In fact, the adoption growth in China has been going on for months now, according to management. And once we get over COVID-19 and every other region starts to snap back, I think sales will start to take off. I'm currently modeling about 150 million in sales for the full year, followed by 215 the next. I mean, in terms of the total market, 36 million in sales in a quarter is still peanuts. So there's a lot of room for growth here, and customers are taking a liking to their product. Right now, they're focusing on expanding in the US, Europe, and China. So this is getting a bit long. I'll save the rest for when we record the video. But in short, I think this is a buy here in the low 20s. And based on future revenue and cash flow projections, which I'll share in the actual episode, I think the stock goes to mid 30s within the next 6 to 12 months.
Yeah, good stuff. This would be one of your investing theme stocks, right? We're running different kind of series on JaguarMedia. So earlier when we discussed that DAO is now a potential buy point here, and I agree with that, by the way. That's from the series that we run on the Chinese stocks, which was called Chinese Tech Demystified. And this time, this one Xpel is going to be from a brand new series that we just introduced today, that we're going to be launching the investing series. Is that correct? Just to make sure.
Right.
Yeah, I think it's an interesting company. What I'd be most interested in is that what kind of growth can be dependent on, conservatively speaking, over the next couple of quarters, because valuations look pretty cheap, small cap, high growth, and Chinese sales tripling in the quarter year over year. That's very, very impressive. And I think US sales will likely pick up too as we continue to move out of the shutdown phase. So it'll be an interesting one, what kind of full write-up you have once it's ready to be issued. Looking forward to it. Great stuff, Chronicle, as usual. Let's stop over here. We're going to cover some of these stocks once we get to the point of Jaguar Media production. You can see the full description there, along with the write-ups and such. More importantly, short-term, technically right now, Nasdaq up 2%, gapping higher. Look for lots and lots of stocks today to be up 5, 6, or even 10% today. That's it from us. We'll see you in the chat room shortly.